Well, there's a lot of heightened expectation in the market as to what the GST bonanza is going to do to the Indian consumption landscape. And as investors, I guess many are wondering what is it that they should be doing to their portfolios. While yes, the premium end of consumption has done very well, but there's been the very unloved staple segment as well. You always debate about valuations when it comes to consumption. So a lot of question marks out there. How is it that as an investor you now realign your portfolios? And that very strategic decision should happen very soon, given that the GST meet is now just next week. You've got the slabs, hopefully, which are going to be announced. And who better than Milind Karmarkar himself right here in the studios to talk about how is it that you should be looking at your portfolios with regards to consumption. Milind, great to have you in the studios. Thank you so much as always.
Thanks for having me here.
Of course. Consumption.
Yes.
Now everyone's wondering, am I underinvested in consumption? You know, that's the first question that's coming to everyone's mind. How is it that you paint the entire canvas now for consumption?
Okay.
Because consumption to everyone means something so different. Consumption is such a large umbrella with so many, collaterals and peripheries.
Correct. So for us, when we say consumption, we basically look at the rising per capita in India. Like way back in 2001-2, when I started looking at this particular aspect, which is rising per capita income. Per capita income in India was about $400. Today it's about $2,600. So if I look at this in rupee terms, it has done better than the inflation. So it's very clear that there is more money in the hands, in the pockets of people, that after considering inflation also, than what they had about 25 years back. So because of that, we are seeing people spending money. So where do people spend money? So there are different areas where people spend money, whether it's business, whether it's finance, or whether it's hospitals, whether it's pharmaceuticals, whether it's travel tourism, whether it's FMCG, whether it's retail. So all these sectors encompass what we consider as consumption. Now within that, our favorite, has always been retail.
Yes.
And there is a reason for that. So long back when I looked at the American economy.
Consumer pattern.
Yeah. So what happened was that in earlier 70s, it was all the FMCG companies which did very well. In about 25 years' time, it was the retailing companies which moved to the top 5 companies. And that is what is exactly happening in India. If you see last maybe 25 years, you see companies like whether it's Hindustan Unilever, whether it's Colgate. I'm talking of them because they were the favorites previously. Like toothpaste to sabko lagega, people will start brushing their teeth twice, or whether it's Hindustan Lever with soaps and detergents. But if I trace their growth in the last 25 years, it has given a CAGR of just 8%.
Yeah.
While as all these companies have given much larger, at least 3 times what they have delivered. And that is the reason why retail is our favorite. But at the same time, when we are talking of rising per capita income, one should also look at what I said, whether it's finance, whether it's hospitals, whether it's pharmaceuticals. So that is where one should keep the focus on.
So let's talk about first FMCG.
Yeah.
Because, the near-term event is the GST slab rationalization, and everyone's wondering what happens now. I mean, toothpaste and shampoos will get cheaper, but that doesn't mean that you're going to consume more of them.
Absolutely,
right?
You're right.
So what do you do? Do you completely cut that segment out of your portfolio as an investor right now? Because like you said, those heydays are gone.
Yeah.
That's a well-discovered story of the past. Does it continue in the past, or do you think these stocks will come to the fore?
So if you have, so Ashwath Damodaran has written a book on corporate life or corporate, I think, so he talks about the life cycle of a corporate, where you have the initial phase where there is a lot of growth, then there is sort of a decent growth. And after that, it goes into a stagnation and then a decline. So unless and until the corporate evolves and changes, till that time, it is better to stay away from that. So if I look, so basically it's a mature state. So if I look at Hindustan Lever, so long back when I was a kid, I remember we had only one soap.
Lifebuoy?
Lifebuoy for as a body wash,
Yeah.
and for clothes it was, if I'm not mistaken, 501 bar sabun.
Yeah,
And
yeah.
to dip our clothes or to soak our clothes, the 501 bar sabun shavings were available. So you used to use that. From there we have come a long way.
Yeah.
But now it is deeply penetrated. You go to any small village, you will get those small sachets of surf,
washing powder,
small
yeah.
sachets of shampoos. So that is the reason I think these businesses are mature. Now they may grow again, but that growth won't be significant. So that is the reason why we are trying to avoid these companies. As far as invest, so great companies, great management, but at the wrong place. So that wrong place in the sense it's a mature business. It will give you a steady cash flow, but beyond that, nothing.
Much like what we say about IT now.
Yeah.
Okay, so that's about the Unilevers and, staples of the world.
Yeah.
But what about how India is going to spend? And when it comes to retail, do you buy the people who own the retail formats, or do you buy what they sell in those formats? Yeah,
so then basically you're talking either FMCG or retail. So between them, I would definitely go for retail. The reason is that retailers have got the pricing power. So that is what actually happens over a longer period of time when retail becomes large. And if you ask me, frankly, it has not become large still. It has got a huge opportunity. So as retail becomes large, they get the pricing power. So this is as far as staples are concerned. So then they can ask for their discounts with the FMCG companies. And that is why retail will do well over a longer period of time. Coming to companies like Trent or say Star Bazaar, they have a different model, which is they work on own labels, so where the margins are still higher. But in general, retail is likely to deliver a significantly higher growth than FMCG.
But there's always what you buy and what price do you buy it at, right? And when it comes to a Trent or even D-Mart till about 2 years back, you were a little uncomfortable putting fresh money to work.
Okay.
Now Trent, of course, has gone through its, fair share of decline, and now you can say it's fairly valued. But do you pay whatever price it may be for names like a D-Mart or a Trent or a Star Bazaar just because these are structurally strong stories? Or do you think price consciousness is something that you need to be wary of?
Price consciousness one always has to have. So whether it's any stock, whether it's Trent, whether it's Avenue Supermart, whether it's Zomato, any stock within the retail space you take, you need to be price conscious. But every year you will get an opportunity to buy these stocks. But one should remember that you are buying these for long term, because as I say that this is a mega trend. This will continue for 15 years still. But at the same time, you need to be careful because these are stocks which get affected by economic cycles. And if the economy goes into a sort of a stagnation, you will have 3-4 years where these stocks won't do anything. Typically, since I'm looking at Trend for a very long period of time, if I'm not mistaken, between 2012 to 2017, maybe I'm off by 1 or 2 years, but at least 4-5 years, Trend didn't do anything. But if you would have sold that, it's gone. You would not have got it back. So that is the reason why these are the type of stocks which are your portfolio stocks, which you buy and hold for a long period of time. If they fall further, you add more. So when you are investing in something which is in a macro trend, what you do is that whenever you get an opportunity, you buy little. Just don't push your entire portfolio into that. You buy little, hold on. You will get opportunity every year. So that is what, especially for retail investors, they should be doing that.
So right now is the time for Trent. You can continue to nibble in. I mean, the stock went to what, 4,800 or so also this year?
Yes, it did.
Yeah.
So I won't give any advice because I'm not allowed to give any advice.
Sure.
And it's not fair also because I own Trent. I own myself. I own in my fund. So that's a sort of a disclaimer.
Yes.
So this is not an advice. But I can say that the growth in Trent, if the per capita income continues to grow, Mr. Tata has said, so forget about me. Mr. Tata has said that we can become 10 times in not so distant future. So then you have to take your call. So that, of course, any talk with the management, you have to be, you should understand that that is their goal. Yeah. Whether it will happen in 2 years, 5 years, 10 years, one doesn't know. But the business is excellent. So that is why I said that the best thing to do is to keep buying on a regular basis, all these stocks.
Okay, that's that on Trent.
Yeah.
Your other erstwhile favorite, and continues to be so also, has been Titan, from the same stable.
Correct.
The kind of innovation that Titan is
Absolutely.
making. I mean, just the other day we were, speaking with Mr. Venkat, and he said, you guys must go check out the handbags that we're selling. It's a store near to your office. And I mean, from that very generational view of one watch being almost an heirloom of sorts and being passed from one generation to other, Titan is now becoming like a very young-facing company, if I can call it that. It's appealing to the younger generation more than, what it used to be, say, about even 10 years back.
That's true. So, as far as Titan is concerned, let me give a disclosure that we have sold off Titan.
Okay.
And there is a reason for
Completely
that.
exited.
Completely exited.
Okay.
There is a reason for that. That in our view, what happened was that lab-grown diamonds started coming in. Though no one is still willing to take a bet on lab-grown diamonds, in my view, they are exactly the same in terms of chemical composition as a real diamond. There is no, let's say, any, what should I say?
Chemical difference, composition
difference is not there, looks difference is not there, and they're better for environment. That is the reason why I think...
And so much cheaper.
Yeah. Significantly. 1/10 probably.
Yes.
So that is the reason why I think over a longer period of time, it will be lab-grown diamonds. Or let me put it the other way around, I think studded jewelry will become a commodity. That's a call which we have taken. Again, it's a long-term call. Whether it will happen in 2 years, 3 years, it may not happen. If I look at most of these jewelry companies' growth in the last say couple of years, it has all been driven by gold prices. If you cut off the gold prices, you will actually see volume declines, and that is what we are worried about. Titan also had said in their analyst meet that they are facing competition, and that is the reason why it is likely that they will have to reduce their margins. So looking at all that, and we had made, as I said, Titan has moved from 2002 to 2024 about 800 times. We decided to sell Titan because we thought that the next 3-4 years till this whole overall of things happen, it may not do much. And that is the reason why we sold Titan. Excellent management, good proposition, but probably will stagnate for 3-4 years. That is the only reason. But otherwise, a great company, they are innovating. And that is what, again, I'll go back to the book which Ashwath has written. And he says that a great company can become greater if they decide to innovate. And that is what exactly Titan is doing. So I think they're doing things right. We'll wait and watch.
Absolutely. So that's that on Titan as well as Trent. Where does D-Mart lie in the piece of pie? Again, extremely well-tracked, excellent management, but they're also kind of going through their little bit of a consolidation phase.
It happens, Ayesha. So what happens is that, they are currently consolidating. They are slowly moving to smaller towns. And India has got huge opportunities. So 1 or 2 years of consolidation doesn't really matter. If you are a long-term investor, if you are a trader, then yes, it definitely impacts. But if you are a long-term investor, it doesn't matter. As long as they're doing things right, they're at the right place. And I think it's a great company to, look at anytime.
But when you look at the urban segment, it seems that what is hitting their business is also quick commerce.
Correct.
It's also, all these food aggregators and, just the fact that you can get anything that is available at a D-Mart sitting in your home via your apps. Do you think that's a bigger structural challenge for companies, not just D-Mart, but companies like D-Mart, that format?
Okay. So, yes, it could be a structural challenge within large metros because, the population density is high, so delivery charges are much lower.
Yeah.
Second is that, of course, there is a much higher per capita income than the rest of the other places.
Yeah.
And that is the reason why I think they can do well when it comes to these larger metros. Whether they can do well in the smaller cities, I don't know. The jury is yet to be out. I mean, initially there is this nuance, that is the reason why people go and try it out. But whether it can sustain over a longer period, I have personally my doubts, and that is perhaps the reason why this type of model has not been successful globally. It is successful in India precisely because of high population density and rising per capita income within the metros. So yes, again, a disclaimer, we do own Zomato, and it is for this specific reason that we own it, that we think that they will do well at least in the metros,
Urban
and where
centers.
again the population is large.
But when you talk about D-Mart or, the value retailers, if I can call them that, do you think for them the next leg of the story is now with penetration into tier 2 and 3 cities and beyond?
Yes, I agree.
Is that the growth?
Yes, that will be the growth driver for them. And I think they will do it. But initially, of course, they will be very cautious because they have not tried and tested that area. So they will have to do it very slowly, and that is the reason why you are seeing a kind of a, I won't say slowdown, but slower growth, let me put it that way, in these companies. But it will also pass, let me put it that way.
You talked about Eternal. We have to talk about that because, while everyone knows that, and, it's a duopoly for all practical purposes, only Eternal and Swiggy, but they're still not making money.
It is not.
Yeah.
It is
We
not.
all
So
know that we are going to need them for the rest of our lives.
But
and if they start selling their own brands, if they start selling medicines, I don't know how regulator environment is going to be.
So regulation is
in the
one.
years to
Second
come.
is, I as a consumer, whether I will buy it. That is also another question.
Yeah. But, you're structurally convinced. It's about whether you're willing to pay that price. And
Absolutely.
are they making profits or not? How do you wrap your head around that?
So you give them some more time. Let me put it that way.
How much more time? And what could be that positive or negative trigger which will make you take a call either which way?
If 1 year down the line also they are losing money, I think I will not be convinced about the story. Because then they would have done it about 4 years. And after 4 years also, if they are not, I'll take a review. Let me put it that way. I'll take a review and then take a call at that point in time.
But Milind, like before the show that we were discussing, if they make money, that means we'll have to pay higher. If we have to pay higher, we may not end up using them at some point.
So I'll give you an anecdotal evidence. Sometime I have a house in Pune. Sometime back I was there, and just opposite our house is a bakery which sells very good patties.
Okay.
So I decided to go and buy, since it's just about 3 minutes walk. I went and was buying there. I saw a Zomato guy with his bag. He had also come to pick up for his client, of course. The differential was 100%. And that is when it struck me that this doesn't work. For a small price item, probably no one wants a hassle. That's why, but this continues for a long time. It's not going to work. So I think, yes, they will, what you're saying is right, that if the prices go very high, then probably they will feel resistance.
Okay, so we've talked about how people are going to shop better, eat better with convenience, all of that. How is it that you're going to continue with the premiumization there, the look good, feel good factor, which, the urban youth looking at a demographics, everyone wants to dress better, look better, the BPC segment. You find opportunity there? Because
BPC is a very interesting segment. Very interesting. We are looking at it. The other day I was talking to someone, one of the companies. And for them, BPC segment is growing at a significant very high double digits. Look at the listed share, which is Nykaa. They are also doing very well. And India's per capita consumption is very low. So it is a direct beneficiary of a rising per capita income, with significant portion of the women's population also coming. Of course, I wouldn't be biased saying only women use makeup. Even men do now. So I don't want to use that. So even men have started using a lot of
they're as vain
products.
as women.
They are. So I think it's a big opportunity. We continue to look at spaces. So retailers are, of course, one of the easiest way to invest in them, but we are looking at others as well. And if we get an opportunity, if we think that the price is right, it can be an interesting area to look at.
It is interesting, but other than Nykaa, what opportunities would you have? There are these, the market is booming with newer BPC players.
Yeah.
One is that. The other thing is the listed pool is so narrow right now that there aren't many opportunities. Either you look at a semi-growth story and be like, okay, this could be an acquisition target someday. But again, that's in the unlisted space.
So again, I go back to 2002 because that is when we came out with a report on India retail. And there were only 3 companies we found. One was Trent, which was extremely new, 60 crore turnover. Second was Titan. Third was Pantaloon. And beyond that, there were no one. We did not come out with a report on Pantaloon. We did come out with a report on Trent and Bata was there. Very small companies. So there will be companies, but from there we have come a long way. Now there are many companies in this space and you will continue to get companies. You'll have to be patient, that's all. But as of now, you're right, there are not many.
Yeah. Okay, that's the BPC segment. What about rural demand? Because this government push has also come on the back of the slowing rural growth and kind of peaking out urban story. While urban, I understand that's where you'll see the maximum alpha in terms of a per capita rise.
Right.
What about the rural segment? And how is Bharat going to evolve to India?
So there are, if I'm not mistaken, at least 5 or 6 states where rural India, the average per capita income has crossed $2,500. So there is an opportunity which is coming up there as well. Yes, it will be relatively slower in terms of growth, but the consumption patterns are changing there. And that is where I think over a longer period of time, that is the section where you will see the maximum growth. So I think affordability is the key in looking at companies. When you are looking at companies in retail or companies in FMCG, people who are selling affordable or people who are focusing on not 100% rural, but let's assume that they are basically betting that as the people move from $2,500 or $2,000 or $500 to $3,000, that is where the maximum opportunity will lie. I don't think rural will do very well over a longer period of time. As they shift from, as the percentage of agriculture in rural income it has started coming down. But as industrialization, as services, all these things pick up, I think even rural India will do very well. It's a question of time.
What companies do you play with when you want to ride the rural, uptick in demand story?
So you can look at companies again, because I think one point or the time these retailers also will have to go to rural, in the sense they may start at a district place. They may not go to rural.
Yeah, of course.
But there could be other companies as well. So we are talking only of retail and consumption. I think we should look at hospitals. We should look at pharmaceuticals, because these are the companies who can benefit significantly. Much earlier, when I had spoken to Dr. Reddy of Dr. Reddy's Laboratories, and that time I think I've spoken about this earlier. So that time when I asked him that why don't you sell your medicines in India more than your exports, because that time their exports was very high. So he said, Milind, unfortunately people don't have money to buy medicines. So as that changes, I think even that can be a big macro trend, but it will take some time. It won't happen immediately. But I think these are the type of companies which one can look at, or even hospitals for that matter.
Oh yeah.
People don't have hospitals, don't have money to get into hospitals. But as insurance goes up, as per capita income goes up, all these sectors are likely to do very well.
And also the demographic story. We're today a young country. 20 years down the line, they all will need the medicines and the hospitals at some point.
Absolutely.
So, Milind, I think, the other debate also is, do you stick with the premiumization story? Do you have a little bit of all in your portfolio? Your hospitality segment has done very well. Aviation, there is the one listed player, which is the most sought out. I mean, you don't have any other choice, so far at least. What about those stories? Are they must-haves as part of your core portfolio?
So premiumization, I think you can play through, if you can get a beauty BPC player, that would be the place where you keep a premiumization play. I think as far as FMCG is concerned, premiumization is a very small portion. So I don't think they will benefit significantly. But again, banks is something where you can look at. We have been looking at affordable housing. That again is a massive opportunity. So affordable, I will give more weightage. So whether it's affordable, whether it's say lowest cost service providers. So these are the companies which can give you a significant delta over a longer period of time.
Because they are lesser discovered.
They are lesser discovered. The second is that people are not looking at it that way. If a
and penetration pool is much higher.
Penetration pool is much higher. Absolutely.
Great. So much insight and so much food for thought, Milind. Thank you so much for your time today.
Most welcome. Most welcome, Aisha. Thank you very much. Nice talking to you.